The largest initial public offering in history just happened, and if you manage to grab a share, you've lived through one of the wildest 6 weeks in stock market history without even realizing it. What actually justifies a $1.75 trillion price tag on a company that lost nearly $5 billion last year? Why did a rocket company that spent 24 years deliberately avoiding public markets suddenly need $75 billion from one? And why has a stock that briefly traded above $225 spent the week since sliding right back down toward where it started? Start with the mechanics of the offering itself. SpaceX priced its IPO at $135 a share on June 11, 2026, selling more than 556 million shares to raise $75 billion at a $1.75 trillion valuation, comfortably the largest IPO ever recorded, more than double what Saudi Aramco raised when it set the previous record back in December 2019. Demand was so overwhelming that the order book came in around $150 billion, roughly double the amount of stock actually on offer. Unlike a typical IPO, where institutions get first pick and individual investors get whatever's left, SpaceX reserved about 30% of the offering for retail buyers through Schwab, Fidelity, Robinhood, SoFi, and E-Trade. That tranche sold out completely, and plenty of people who requested shares got a partial fill or nothing at all. Then the stock actually started trading, and the numbers went somewhere even the bankers hadn't priced in. Shares opened at $150 on June 12th, up 11% out of the gate, and closed the day at $160.95, a 19% first-day gain that valued the company at roughly $2.1 trillion, briefly making it worth more than Tesla and the sixth largest public company in America on its very first day of existence. More than 500 million shares changed hands that day, trading volume that approached Facebook's 2012 debut. It didn't stop there. On the first full trading day, the following Monday, the stock jumped another 20%, closing at $192.50. Here's what almost none of that price action had anything to do with: the actual business underneath it. SpaceX's own prospectus shows revenue of $18.7 billion in 2025, up a healthy 33% from $14.1 billion the year before. But the company also posted a GAAP net loss of $4.94 billion for the year, a sharp reversal from the $791 million profit it had reported in 2024. That loss accelerated into 2026 with a $4.28 billion net loss in the first quarter alone, pushing the company's accumulated deficit to $41.3 billion. A company that had been quietly profitable as recently as 2024 walked into the largest IPO in history, bleeding billions a quarter. The reason isn't rockets, it's artificial intelligence. In February 2026, SpaceX folded Elon Musk's AI venture xAI into the company, and the S1 shows that segment alone posted more than $6 billion in operating losses in 2025, then burned another $2.5 billion in the first quarter of 2026 by itself. The segment most people actually associate with SpaceX, the rocket launch business, lost $657 million in 2025, plowing nearly $3 billion into developing the next-generation Starship rocket. The only part of the company consistently making money is Starlink, the satellite internet division, which pulled in $11.4 billion in revenue, 61% of the company total, and $4.4 billion in operating profit, the single profitable pillar propping up two money-losing ones. Starlink went from 10,000 beta users in 2021 to 10.3 million subscribers across 160 countries by March 2026, though the average revenue per subscriber actually fell 18% to $81 a month as the company chased volume over price, before reversing course and raising prices by up to $10 a month in May 2026. The ownership structure tells its own story. SpaceX kept a dual-class share setup that preserves insider control regardless of who buys stock on the open market. Antonio Gracias, a SpaceX board member and the CEO of Valor Equity Partners, held 7.3% of the company's Class A shares heading into the IPO. And his firm separately leases over $20 billion worth of equipment to xAI, which has paid back $1.7 billion of that so far, a related party arrangement disclosed right in the prospectus. Gwynne Shotwell, the company's president and the person who actually runs day-to-day operations, ranks only as the fifth largest Class A shareholder and holds Class B shares carrying 10 times the voting power of whatever ordinary investors bought. Which brings us to today. As of this week, SpaceX's 52-week trading range already spans from about $122 to a peak above $225, meaning the stock has given back nearly half its value from its post-IPO high in a little over a month, and is now trading close to where it opened on day one. Morningstar's own analyst pegged fair value at just $63 a share before trading even began, well below even today's beaten-down price. The people who scrambled to get a piece of the largest IPO in history mostly ended up owning a satellite internet company that's profitable enough to fund a rocket program that isn't, and an AI company that's burning through billions faster than either one, all stapled together into a single stock and priced on day one, as if none of that mattered yet.